What is going on, ladies and gentlemen? We have Mr. Jacob Rhodes, aka JKR Investing, aka Mr. Previous Greg's, aka the new Boohoo man. How you doing, brother?
I'm good. How are you? It's good to be here. We've been on about it for so long, so to get this actually going, fantastic. Look forward to it.
I appreciate you jumping on the channel, brother, man. I've been a long fan of your work, and you're probably one of the only guys, UK guys, that I actually watch.
The UK scene at the moment for the stock market's just booming, and I think there's just so many good people coming in here. But yeah, it's a good growing scene, isn't it? The UK scene, and I appreciate you watching me because I watch you as well. So,
Jacob, before we go into the meat of the interview, I want to give you 20 seconds to introduce yourself, your name, how old you are, where you live, just a bit of the juicy details about yourself. So you got 20 seconds. Go, bro.
yeah. I'm from JKR Investing. Like Emmanuel said, my name's Jacob. Basically, I started doing a stock market channel. I started investing around 2017. And at the time, I was like, I'll start just doing a video once every week, just talking about my portfolio. And it's one of those where you just get more and more into it. And I was just loving. I mean, we do it to make money, but I was like, I'm really enjoying this and looking into companies and everything like that. So just got more and more serious into it, came more and more serious with the uploads. And I think like 2019 was the turning point where I was like, right, I want to do a lot more YouTube videos because I think I've developed quite a bit as an investor as well now. Because beforehand, I was one of those that was still making so many of the basic mistakes that I thought, I don't think my knowledge is right there, but now I think it's kind of got there. And like I said, I took it more serious in 2019, really. I'm currently 26. I do stock market investing. I also run a little bit of a private stock market group. I own a couple of properties as well. And it's just kind of gone on from there, really. So I think you're in the property game as well, which is another good side hustle to have.
Yeah.
But yeah, that's kind of how everything went, really, for me.
So you started investing in 2017. So you were what, 23?
Yeah, I think so.
At 23, right? Most people get into investing when they're a lot older. Do you get what I'm saying? So
yeah.
At 23, like, how did you get involved in investing that early? I mean, did you have family members?
I think, to be honest with you, I just kind of had one day where I was looking in my bank account and I was working a full-time job. I literally just had I think it was something like 5 or 6 grand sitting there. And I was thinking, it's just not doing anything for me. And I was like, what can I do with it? And I thought, is stock market investing one of them? So I was kind of scanning through some YouTube videos at the time. And there was Jeremy from Financial Education. And I was like, oh, this guy seems all right. I'll listen to him and learn some from here. And then kind of went to Warren Buffett, listened to a couple of stuff that Warren Buffett used to do.
He hasn't done that well this year, though. He hasn't done that
well. Yeah. We can let him off. One bad year. Yeah. And one of your favorites, Peter Lynch, as well. Obviously learned a lot from him as well. And then just kind of built it up from there.
That's crazy because, again, like you said, a lot of the influences that you had when you started seemed like they were abroad, American based. Like you had nothing UK wise, right? Like, so how did you then get into like the UK sector? Because you do have quite a lot in your UK portfolio.
To be fair, at the time there was like no UK stock market investors in like 2017. And I thought I'll just kind of see what happens, and stuck to US stocks. And I think eventually a few people started coming to my channel because I was a UK investor. People from the UK sometimes want to hear a UK voice, I guess, really.
Facts.
And then quite a few people were like, you're from the UK, Jacob, why don't you do a UK stock market portfolio? I thought that's kind of true. And then at the time, prices started working out because we started having Brexit at the time, and the stock market was going down a little bit from that. And then we had COVID as well. And I was like, well, there's no better time to do a UK stock market portfolio right now. I started off in, like you say, US, and then I went to the UK eventually.
And there are some really good deals, especially now in the UK scene. Because I think the FTSE went back over 6,000. So there are some good recovery stocks in the UK scene right now. But what do you prefer? Which is your favorite? So US or UK stocks?
I hope the next question isn't going to be, is it Boohoo or Greg's? I can see where this one's going to go. It's like choosing your favorite child. The US side of it, just because how more the economy grows, and that obviously helps stocks. I think a lot of US stocks are worldwide
Yeah.
and can go into a lot of other countries, where I think a lot of UK stocks tend to just, stay in the UK. I prefer US stocks because you can get more developed companies with a lot of like worldwide growth, and you've
Yeah.
also got a US economy that grows quicker.
Yeah.
So I would say US stocks, but there's still great deals in the UK for sure. I mean, it's not a bad place right now.
The thing is, like, I remember because I started in the US stocks as well, and then when I started looking at some UK stocks, like they all, like some of the big names look like penny stocks. Rolls Royce, like that's one of the largest, UK car manufacturers, luxury, and it's like 50p, 50p. I was like, wait, is that a typo? I really didn't get it when I first started. I was like, what is going on with UK stocks?
You imagine picking up a 50p and go, that's one Rolls Royce share right there.
One Rolls Royce share right there. Oh my. I was on the street when I saw like 10p on the floor. And I remember at the time, Into retail. Yeah, they have like lakeside shopping centers, massive shopping centers in the UK. I think Into was it like 7p a share? I was like, so you mean to tell me this stock, this 10p that I found on the floor is equivalent to one share of Into? Mad.
Yeah. It's worse when you start looking at something like an Amazon and then you go, right, $3,000 for one share.
For one share. But I think you're absolutely right in terms of like the global reach of US companies versus UK companies. There's no comparison.
But I think that's probably why so many Chinese stocks tend to go on the US stock market rather than the Hong Kong listings. Yeah.
And you've done pretty well with your Chinese stocks. I would advise anyone who's watching this, go and check out Jacob's channel. He goes through his recent gains in some of the stocks, and man, bro, you killed it. Absolutely killed it. 2020 has been an incredible year in terms of your returns. Your even you put me on Hua. Is it Hua?
Oh yeah.
I hadn't heard about Huya before until I started watching your channel, and I was like, okay, it's quite an interesting company. So what's your process then? Like, so how do you go through picking your stocks? Like,
be different for if it was a value to a dividend to a growth stock, but more than likely, if I got told the stock, if I saw it on TV, if I saw someone in my comments mention it, someone DM me on Instagram or something like that, I'd first of all go on the stock chart, and if you see it's gone on a straight line, you're like, whoa, that's a big run. Or if it's sunk down, you get kind of a good valuation of what the company is. I think then you go to the market cap, you get a good idea what the size of this company is, and you know what you're dealing with. Obviously, smaller market cap, you probably have a lot more volatility, maybe a newer company, compared to something like a bigger market cap. Probably from there, probably have a scan on Simple Wall Street. That's a pretty good one that I like to use. Yahoo Finance, I think, is pretty good as well, which is obviously free. And then just run down some of the numbers there. You can kind of get, a P ratio, profitability, revenue growth, balance sheet, for example. And normally from that point, I can pretty much eliminate if I'm going to buy a company by 80%. I tend to not go for very debt-heavy companies. So if it has a lot of debt, it's out the window. I like to have growth because I think growth tends to be one of the things why the share price goes up, and profit as well. So them key things will tell me straight away how much I'm interested into it, and a P ratio or price to sales ratio or something like that, run through them a little bit, and I get a good valuation of the company. And then kind of compare it to some of the competitors as well. And then you can kind of see where it is on the industry line as well. And then from there, if I'm really liking it from there, I'll go on to, the investor relations. I'll try listen through a conference call as well. And I mean, I make it sound pretty easy through a 5-minute process, but normally that does take quite a while. But normally by the time I've gone through the numbers, I have a good idea where I'm at with the company. A Yahoo Finance page, if I'm liking it or not from there. I've got a watch list that I track hold of. And if at any point I see like on one day, one of them stocks is down like 20%, 30%, then straight away I'm like, it's on my watch list, so I must like it. Why is that down? And that normally helps. And I normally, when I see a stock like sink quite a bit, that's probably the one thing that like I really look at and go, okay, is there a buying opportunity here at cheap prices? I think that's kind of one thing that I do really look out for. So yeah, if I see like, for example, if I see a company I like, maybe something like a Zoom, I know you're a big fan of Zoom, but like if that's on my watch list and then it drops down like 10, 20%. I'm like, oh, it's on my watch list, so I must like it. And now it's dropped. Is this time to go buy? So that's definitely one thing that I like to use to see if I do want to buy something, I guess.
Nice. Now, what sectors right now then? Because your portfolio is pretty diverse, to some extent, but you are, well, actually, I won't spoil it, no spoilers. But what are your favorite sectors right now in the UK, and also your favorite sectors in the US?
I think for the UK side of it, I don't think we're blessed with that many great technology companies, which is one of the negative things being a UK investor. There's not many out there. I know you talked about keywords the other day, actually, just going off topic, and that seems really interesting. And that's kind of a bit technology play. Yes, that's one on my list that I got from you. So I would say most of them that I've been buying in the UK are actually probably quite risky ones that are more like leisure based, or some brick and mortar stores.
Can I give you one of your names, one of the stocks that you've got, which every time you mention it, I'm like, oh, it makes me. It's Hollywood Bowl.
I know which one you're gonna say.
Hollywood Bowl. Hollywood Bowl. That one, I'm just like, Jacob, like, why are you so bullish on Hollywood Bowl?
Oh, I love Hollywood Bowl. To be honest with you,
I know.
I'm such a fan of it. Like, I would generally wear a Hollywood Bowl t-shirt. Like, what they actually wear to work in, I'd be happy to have one and do a video when I do my Hollywood Bowl videos. I mean, I love it. I absolutely love it. Like, I think like when you go, it's a pretty decent experience, and I think they're upgrading them all, and they're starting to look fantastic. I think management are pretty good. I think when you look at the previous growth, massive previous growth, I think when you factor in how many more venues are going to open up, it's only going to help profit and revenue. And we look at the share price, man. Jesus, that's one's got killed. I think that's like a £3 stock. That's now dropped down to was down at £1 at one point. So I think when you look at the discount and how good the company was pre-COVID, I think they're going to smash it when they start getting opening. And I think earnings were pretty good as well. I don't know if you saw their earnings on that one, but went straight back to profitability when they opened up, which I was like, that's pretty decent, because so many companies weren't able to do it. That's insane. So yeah.
Because I've been to Hollywood Bowl once, I think once in my life, and I just can't imagine, like, once we start opening up again, people will they be able to go back to full capacity, or are they going to have like one lane open, one lane shut? Do you get what I'm saying? Yeah,
from what I got told, what they're doing at the moment is they opened up at 50% capacity, and then they started going up to 75, and then they're going up to 100%, obviously, before they got closed again. And what they were doing is they were starting to put, the protective glass between lanes, so then they could actually fill lanes back to back. So I think that's where they're looking to go. So it looks like they will be able to get back to 100% capacity, which will be pretty good for them, to be fair. But
that'll be amazing. Yeah. No. Okay. And what about US then? What are your favorite US sectors?
I mean, I would say technology, but pretty much every company that is successful now has some sort of technology, I guess, isn't it? Like Visa's a payment company, but you'd still say it has a bit of technology, wouldn't you? And everything like PayPal, Square. I mean, the payment companies, but they have technology. So I'd like to say technology, but there's so much of that in every company now. But I mean, it's hard to actually pinpoint like an actual complete sector, but I would say that I would have to buy a company that does have some sort of technology in there, because I think that is where the growth is. Like something like a brick and mortar store definitely wouldn't interest me that much. It would have to have some sort of technology in it. So I'd say technology if I can say that, but like I say, so many companies do have technology in them now,
So what did you think of yesterday's technology stay-at-home tech stocks that had a bit of a sell-off yesterday? Well, yesterday we're saying Monday, because this video is going out on Sunday. So on Monday's trading session, like what was your thoughts? Because I'm trading 212. Let's even go there before we get into it. So I was trying to log into trading 212, and it was down for half an hour, bro. Half an hour.
Yeah.
By the time I eventually got in, I saw Amazon was down, Apple was down, all of my investments. I was like, wait, what the hell happened? You know what I'm saying? I want to buy more. That's my thing. I love buying on red days. So I couldn't even get in on trading 212. Like, what is going on with that platform?
Yeah. It's nuts, isn't it? Because the thing is it dropped down as well in the COVID dip, didn't it? Trading 212.
Yes.
And it's a bit like now, like every time it drops or goes up a lot or drops in some cases for the stocks on Monday. Like, is this going to be a problem that we have with trading 212? And I think we both agree, like, as soon as the stock market drops, we're on there going, right, I need to buy this. You know, and if we don't have that, it's like we're not getting it at the best times, which is definitely worrying.
Yeah.
I was trying to go on Twitter, to be fair, and see like which stockbrokers posted on Twitter saying, "Oh, sorry, we have some problems," and it seemed like Free Trade had some as well. It seems like obviously Trading 212. I think there was a few other ones as well from the UK that were down. So I guess it wasn't just them, but
Yeah.
you know, we don't want another COVID dip, and we're on there trying to buy stuff and we can't get on. So it is a bit of a problem at the moment, isn't it?
Someone messaged me on Instagram as well, replied to my story and said apparently Webull was down on the Monday as well. So I don't know whether that was most of the platforms in general were just down, but it seems to happen on key events, because it was down last week as well. I think on the election day, it dipped. The service was down as well. But the good thing is that they do update you on their Twitter platform, but it's just such an inconvenience right now, man.
Yeah. Well, I mean, they can apologize on Twitter, but when you got Amazon down 10%, that's not going to help you, is it? You need to buy it when it's down 10% because it won't be there for long, you know.
But yeah, Jacob. So on my point with that, what was your thoughts on the sell-off? Because Zoom got destroyed, yesterday. I didn't invest in Zoom for that particular reason, because I love Zoom stock, but I just figured like, okay, if a vaccine does come out, everyone's going back. Not everyone's going back to work. I don't think everyone's going to go back to work, in my opinion. I think the landscape of the way we work has changed, but the demand for Zoom will no doubtedly drop. So what's your thoughts on those kind of stocks then? Like, would you say buy the dip, or would you hold off? Like, what's your opinion on that?
Yeah, I mean, it's so tricky, isn't it? I was saying this about Pinterest the other day, because they were another one that sunk down as well.
Yeah.
And like other companies, like you say, like even like Peloton and stuff like that.
Oh, yeah.
And it's one of those where you're trying to work out how much of these numbers that they're doing are helped by COVID.
Yeah.
And it's like trying to work that out, isn't it? Because the stocks that have been really booming because of COVID, you're like, how long until them numbers come out of the company, to be fair, and then you get back to kind of normal, revenue and everything like that. So it's definitely a really tricky one to kind of work out, and I don't 100% know where I exactly stand with it. I do think there's quite a few companies that still have COVID numbers helping them, but at the same time, something like maybe like an Amazon, for example. I mean, that doesn't have massive dips, and even after COVID, that company is going to be smashing it, just like how they've done for like the last, how many years. So, I mean, I think you probably have to take every kind of stock individually, don't you, and work out how much that artificial COVID numbers are actually helping them.
Yeah.
Like, I think something like you say, Zoom, I think is definitely massively gone up because of the COVID. And, when that starts dropping out and people go back to meetings in person, slowly see that one come down probably a little bit more than that. But I mean, I think you'd probably have to go to every stock individually, won't you? It is kind of, see how it all doing. But I mean, I think as well is that you're going to have probably the people that have been invested in these companies that are now looking at CCL and other companies like that, and are thinking now, oh, we've got a vaccine on the way. Shall I take that risk?
That's it.
So I think there's also going to be that as well, to be fair. So it's tricky. I think you probably have to take everyone, like say, a bit individual. So yeah.
I think that's great advice. I think that's solid advice. Look at each company and try and determine how much of COVID's been built into it to pump the price up. Because I think I was reading something yesterday about market psychology and investor behavior. So now, obviously, with the news of the vaccine, there's a lot more confidence in the stocks that's been beaten down. So, for example, like banks, for example, the idea is, okay, if everyone gets back to normal, then the interest rates might go up slightly. And obviously, banks make money off the interest rates, so revenues should start to get better. So then you're like, well, I bought Zoom at like $100. Is that $500 now or $400? Let me take some profits. You know what I'm saying? Let me take some profits and then put it back into these sectors that have been beaten down, like your Carnival Cruise Lines, your airline stocks, And I think like that's what kind of happened yesterday. Like money was being reallocated to these
Yeah.
sectors, which is why people like the Zooms, the Pelotons, the Amazons, they all got beat down yesterday.
Yeah, 100%.
Yeah.
Yeah, yeah. It's that rotation, isn't it? And
Yeah.
you're a JP Morgan shareholder, aren't you?
Yes. Yes.
Yeah, yeah, yeah. So like you say, like
It went up crazy yesterday. Went up
yeah, yeah,
crazy.
yeah. You never see JP Morgan normally go up that much.
Trust
It was
me.
nuts, wasn't it, for them?
My dividend portfolio was outperforming my growth portfolio yesterday for the first
Yeah,
time this year, and because a lot of my the stocks in my dividend portfolio, you could say they're not growth stocks. Do you get what I'm saying? You know, and
Yep, yep.
my JP Morgans, I have Lockheed Martin in there, I have Johnson and Johnson, all of those companies, those slow, they've been underperforming the hot tech stocks, but they were
Yeah,
up
100%.
crazy yesterday, you know, because
Yeah,
everyone's now taking their profits and shifting it into these stocks, which is amazing.
yeah,
So
yeah.
do you think that creates a bit of an opportunity for us then as investors?
I do think so. I think you would have definitely benefited more if you kind of got in maybe a month or 2 months ago when the prices were a lot lower. But you
Yeah,
always say that after it goes up, you're like, yeah, should have done that 2 months ago. Should have done that a month
exactly.
ago. You know, you
Hindsight.
always, yeah, exactly. It's wonderful when you know the outcome. But yeah, I mean, yeah, I think that there's definitely some opportunities out there, and especially when you look at something like the value stocks, for example, which as well as like the dividend stocks, I think they've kind of just been neglected for so long.
Yeah,
And it's mostly like a lot of the, the tech companies, the COVID proof companies, a lot of the large cap companies that have been dragging us forward quite over the last kind of 6 months, isn't it?
yeah,
Your Apples,
yeah,
your FANG stocks, for example.
yeah.
Whereas a lot of your value stocks as well, they've kind of just been neglected. So I think, I think a few people are now kind of going, I'll take some profit there, like you said,
Yep.
and
Yep.
there's nothing wrong with taking a bit of profit and
Facts.
moving it somewhere else where you see better value and everything like that. So I think it probably will more go that way, but you never know, do you? I mean, things happen in the stock market, and you're like, didn't see that come in, but I think there's probably a lot more value in there in a lot of them smaller value stocks, small market cap value stocks now, and mid cap
Yep.
market stocks. So
Yep.
yeah, I think more and more will go that way. I mean, I think that's where you probably think as well, isn't it? To be fair, that it's probably going to move that way.
Yeah.
So yeah.
And it's just trying to get ahead of everyone because, like you said before we started recording, the people that are at the front pretty much get most of the meat, get the profits. Whereas everyone that jumps on afterwards, after the facts, they get left with the scraps essentially.
100%, 100%, and it's all the time. You see when it goes up, the certain stock goes up 10-20%, and you see the people that were kind of hesitant, like getting into it, and they go, "Can I still buy now at these sort of prices? Can I buy now?" And then, you kind of like, you can do, but 1 month ago you would have got it a lot cheaper,
Facts. Yep.
So yeah. I think like one that you caught at the right time was like Upwork, and you got that, and then you got the rewards. And I
Yeah.
was looking into Upwork, and I was like, damn, I should have got this a
Oh,
few
did you
months
not
ago. I would
get
have.
in?
No, I never got into Upwork. I looked into it, and I was like, I really like this company. It's just a little bit too much now. I needed to have got it a little bit earlier. And I think you got it a little bit earlier. And when I saw you post on Instagram, like your gains on it when they brought earnings out, and it absolutely killed it.
Smashed it.
And I was like, damn, I need to be a month earlier there.
But you did get in. I mean, you did incredible on Tattooed Chef. Like your timing of that was on point, much better average than I did. Anyways, I got in pre-merger, which was obviously in hindsight wasn't a great thing to do. Should have waited. But hey, hindsight, everyone's the best investor. But I figured obviously with the way SPACs have been this year, on the merger, I thought maybe there might be a bit of a run up, but it seems like the SPAC hype is kind of dying down now.
Yeah, 100%. Like some of the SPACs now are not kind of, beforehand when we had SPACs, they were like just day after day going up and up and up. So you were kind of looking now when they were kind of getting, early days, you're like, maybe this is quite cheap because normally they've been going up so much. And yeah, like I said, I think they've definitely calmed down now. But I think like Tattoo Chef, even, probably below $23 is still a pretty decent buy, to be fair.
Yeah.
I mean, it has so much potential. So I mean, it's one of those, you never know. It might go past below my average, to be fair, in the short term.
They had really good earnings. The earnings came out on Monday, and they did actually beat revenue almost by over 60%. They grew their revenue. So it's a company that I really believe in. I believe the industry as well is growing. And like you said, the thing is when you're first or when you get ahead of everyone else, you're almost anticipating, do you get what I'm saying, the move. Because once everyone else clocks onto it, then you're usually quite late. So this
Yeah.
is how do you, and that was my next question actually. So how do you manage your risk then? Like if it's a new sector, maybe a new company or a new stock or a turnaround play, and you're anticipating a vaccine, how do you manage your position? Getting in, do you go all in or do you phase it in? Like what's your strategy for that?
Um, it would depend on how big the company is and how, market cap wise and how small market cap it is. Because if it's a small market cap, I probably expect a bit more volatility. And it
Okay.
would also depend on like the opportunity I believe is there. So something like a Facebook, if I saw Facebook drop from 200 down to 150, I'd be like, how
Wow.
long is it going to be here for? You know
Yeah.
what I mean?
Yeah. Fine.
Because I think when they had the Cambridge Analytica, that I think Facebook at the time was something like maybe 200, and I think that
Yep.
went down to like 150, 140, and I was like, Facebook at these sort of prices, how long is it going to
Yeah.
be there?
Yeah.
And I was just like, right, just because something like that can be a big position in your portfolio, I think as well. It's a good holding to have in it.
Yeah.
So I was like, right, go heavy into this and keep buying. And I was pretty much buying like every time the stock was going down 5%. I just kept loading the boat, and I bought like probably. I normally only tend to buy about 30% of my position at first when I do go in. But something like a Facebook, I was like, I don't know how long this is going to be here, and I don't mind going over my budget probably on this one as well. So I was more like towards like 60% going into that one because I thought
Okay.
this opportunity is going to be here for a while.
All right.
But something like a tattoo chef, I'm like, well, this could go anywhere. It could go, uploads. It could go downloads.
Yeah.
So I just got to be, just got to be ready for it.
Okay.
And yeah, something like tattoo chef, I was more kind of like going at 30% of my position, and then
Okay.
every time it kind of goes down 10% of where I'm at average wise, and then put another like increase my position by probably like 20% every time until I
Gotcha.
get to about 100% of where I want it to be in a position.
Okay. Okay.
So yeah, I kind of try work on 10% of positions going down. I think that's a very good way to go into a company. But like I say, it depends on your opportunity there. Something like a smaller market cap, I think you can be a little bit more cautious of. But I think if there's a golden opportunity there, I think you've just got to, you got to go for it because
Go
it might
for it.
not be there for a while.
Now that's
So
really,
yeah,
really interesting. Like you're very, from talking with you and also watching your YouTube channel, you're very meticulous. It's not one glove fits all kind of thing. Like you look at a stock, you look at the size, like you've mentioned, and then you base your strategy off that. Where it's not just like, okay, this is my strategy, regardless of the company, regardless of who they are, regardless of which sector. Like you form a strategy around every investment you make.
yeah, 100%. Yeah, I think you got to take every situation a little bit different, don't you?
Mm,
And I say you just don't. Just the thing is, in the short term, I think you've always got to remember stocks can go anywhere. That's the thing. And I mean, sometimes you do buy positions, then it doesn't go down. Sometimes it does go the other way and it starts
yeah.
going up,
Yeah.
which is the worst way to go. That's why I always say I prefer stocks to go down
Yeah.
when I start buying them, because then you get your averages lower and lower, and
Yeah.
it gives you that better opportunity to keep buying more and more of the stock. I hate it when I buy a stock and it starts going up like,
Going up.
I'm like, oh, and your pride starts kicking in as well. You're like, I bought this stock at 200. I'm not buying it at 250. And that's the thing with you when your pride starts kicking in with that as well. So
Yeah.
that's the only negative, I guess, when you kind of don't go all in at once.
Yeah.
But still, never mind. You're going to have some nice gains, even if you didn't get the position size you wanted.
I mean, that happened to me literally this morning. So on Monday, I bought into BAE Systems at
Oh
the
yeah,
market open because I've done my DD on that company, incredible company, and they've been hammered. They've been hammered, and
yeah,
despite that, their revenue has been remotely stable considering everything that's gone on this year. I think they missed revenue by a couple of million. Like it was really minuscule, and they also recently won 2 multi-million-dollar contracts with the US Army. So I'm just like, yo, this company's trading at like what, four pounds. It was 7
yeah,
pounds prior to the Roni. I'm like, man, okay, I'm going to start position. So I started the position in yesterday. I put in about 50%. So I thought, okay, this is already pretty much, it's below March lows. So I figured,
Yeah,
and I
yeah.
was like, and then I woke up this morning, looked at it, and it shot up. I was like, oh, for goodness sake.
Yeah, yeah, yeah.
So I won't lie, you know, in that moment, I was like, man, this company is going up. I put in the over 50%, and I'm just like, oh, why did I do that? But it's still going
Yeah,
up.
yeah.
Wait, I think it's still up right now. But like you said, I hate it when you invest and it goes up. It's like, come on,
Yeah.
give me a chance, bro.
Because you'd think if it went up so much, like after buying, you'd be like,
Yeah.
yeah, but you're actually like, no, I want it to go down. It's like, it's such a weird feeling when you know, it's going up and you're actually cheering for your own stock to go down. But yeah, it's nuts, isn't it?
Like when we had the red week 2 weeks ago, so the week before the election, you know, we
Yes.
had the worst week since March. I was
Mm,
over the moon. Like I was going crazy on my Instagram. I'm sure you saw it on
mm.
my YouTube. I was so happy, and I was just buying. We're like, oh, I got so many messages saying, why don't you just wait for the election? I was like, that's what everyone else is doing. Do you get what I'm saying?
Yeah, yeah.
That's what everyone else is doing. So I'm buying now,
Yeah.
and look at what happened. You know, post election, boomed.
Yeah,
I think on the
100%.
Monday it boomed as well, the day before, and since then it's just been going up. And I've had people telling me that, oh, I should have bought during the red week
Yeah.
and whatnot. So I love red days. I love red weeks. You know, it's
Yeah.
just a different mindset. I think a lot of people want to buy and see it go green straight away, whereas
Hmm.
yourself and myself, we buy and we want it to go red and buy some
Yeah.
more cheaper.
Yeah. Yeah, 100%. I mean, it's like now where you look at the stock market and you know you have positions that have gone up, but you're still at the point now of going, can we go down 5%? Can we just have another dip now so
I
I can go
mean,
buy
yeah, a
some
couple
more?
more discounts, chuck a couple more pennies into it.
Yeah, exactly.
No, but when did you develop that thinking then? Because obviously you've been in the game now 3 years, but obviously I'm sure it didn't start out like that when you first started investing. You
Yeah,
obviously, when I first started investing, I was happy when it went green, and that was my
yeah.
that was my mindset. But then all of a sudden, like I think this year more specifically, it shifted towards um wanting to go red. So when did that shift happen for you, would you say?
um, I think the shift happened. I think it probably was about 2018. And I was kind of at the point where I was buying stocks just when, if the stock market had some good days, I was kind of like buying stocks when they were like near highs or at highs.
Mm.
And then within a month's time, the stocks would go down, 5%. And I was like, I've had my money in this company for, like a couple of months now. And I could have got it for cheaper in 5 months. And it kept happening. And I was like, why do I keep buying? And then the stock goes down. And if I
Down.
just wait and I'm patient, I'll get the opportunity to buy it cheaper. And then I kind of realized that. And then I think around 2018, I think it was, there was a bit of a slump in the stock market. I think it was with all the China trade war kind of stuff and
Yeah.
everything like that. I think North Korea were doing the thing at the time as well with the rockets and everything like that. And the stock market went down huge. And I was like, right, I'll just buy really heavy here. And next thing I know, like it recovered within kind of 3 months. And I had that's when I was entering like JD.com. And
Yeah.
like the stock was up like 100% within kind of like, 6 months time. And I was like, so if I just wait for these really big dips and buy there, it is such easy time to make money. I was like, right, just be patient from now on. Every time it's green, don't buy. And when there's hell out there and there's blood on the streets,
That's
that's when I
it.
need to go in.
Max.
And I think since then, there's the quote by Warren Buffett, which is like, be greedy when others are fearful and be fearful when others greedy.
Yeah.
And literally, I just think about that quote every day, and I just think, right, what's everyone doing out there? And I think if it's green, right, everyone's being a little bit greedy, time to be a little bit fearful. And then when I do see the stock market just totally dive, and I'm like, right, here we go.
Here we go.
So I think, yeah. And I think that one thing as well is like I saw when Warren Buffett started buying like Apple back 2 years ago. And I think he was buying in that big massive dip, and like now he's up like loads on Apple. I think now.
Yeah. It's his
I was like,
biggest
so
position right now.
yeah, and I was like, so if this is what Warren Buffett does, and this is how he makes money, then this is what I need to do. So I
Yeah.
think he kind of took that away from him. Like if that's how he works, it to get up on so many positions. That's what I need to do. So yeah, I'd
But is
probably
that
say that.
effective? Because like for example, you look at so the person who's getting a lot of the limelight now is obviously Kathy Woods, Ark Invest,
Yes.
crushing it. And they're
Yeah.
completely opposite to Warren Buffett's value investing strategy. They're more innovation. just think about how it will be in 5-10 years and then plow money in regardless of the price now. That seems to be their strategy. So would you say value investing is dead and this is the new way to invest? Like, just if you see potential, just buy it regardless of the price? Or do you still, what's your thoughts on that?
Yeah, I think a mix of both is always the best thing. If you can get a little bit of a discount, that's a good thing. But I think sometimes to get great companies, you are going to have to probably pay up for them a little bit. And as long as you see the potential for the stock to go up in 2 to 5 years' time, I don't think there's anything wrong with getting a fair valuation company that could still give you massive upside in a few years' time, if you know what I mean. So I think I think if you see potential in 2 to 5 years' time and the company's still at fair valuation, I think there's nothing wrong with it. But I think you would still really benefit if you can get that on a 10% dip, a 20% dip, and then it gives you that extra potential. So I think a good mixture of both of them is still pretty good. But so I think like something like it. I think Kathy Wood, she was buying Tesla, weren't she, quite heavy? Early on, and you look now, and that it was in and out. But you look at that valuation now compared to where it is now, and it's like just boom, it's gone crazy. So it shows you that sometimes companies at fair valuation still have massive upside, I guess.
Yeah. Because I mean, like you Warren Buffett wouldn't touch like a Zoom or a Peloton right now, but obviously at the time now it's planned out as a great investment with those kind of returns.
Yeah. Yeah. Could you imagine if Warren Buffett came out and his whole portfolio changed? He'd gone, right, I'm going from Zoom. Imagine what the stock market would be if they found out like Warren Buffett just went Zoom, Peloton in his portfolio. That'd be nuts, wouldn't it?
That'll be hilarious. That'll be hilarious.
Yeah.
That'll be hilarious.
Yeah.
So speaking of stocks that go down, let's talk about BOOHOO now. You know what I'm saying, Mr.
Yeah,
man, the BOOHOO man. So
I thought we were going to get onto this a little earlier.
Nah, save the best to last. Save the best to last. So I followed you in BOOHOO. I was a BOOHOO flag bearer as well. But I since took my profits and really nice gains on my BOOHOO position. And then obviously it's just been a constant barrage of bad news. And then the whole auditor thing. So I even mentioned you in that video. Do you know what I'm saying? Because gave you a little shout out, But I felt like you brushed over the auditor thing as not really that big of a deal. And I thought, this thing is a bit of a big deal. So what's your views of it? What's your views on it?
It was quite funny because when you brought that video out, I had quite a few DMs going, Emmanuel's talking about you on his channel.
Oh, seriously?
What's he saying?
Is that how you felt? Guys,
I was like, right, let's go see.
There is no beef at all. We're boys.
Oh, quality. But I mean, the thing with BOOHOO is like you can definitely say the media hate it. Like the media, I've never seen anything like this for a while for a company where the media hate a company like BOOHOO.
Yeah.
And I think they've just had it in for them for a while. And then obviously we had the Leicester factory situation, which you can argue they should have done probably a better job with the whole situation, which came out in the Levitt report anyway.
Yeah.
But at the same time, it's still, it's a supplier at the end of the day, I mean, I'm sure there's many suppliers that have had problems for big companies, but they don't get dragged into it. You know what I'm saying there. But
Facts.
I mean, obviously that didn't help, and then with all that, and then all the pressure from the media might be the whole reason why the auditors now left, because of the constant barrage from the media that are pushing them that way. And I think I mean at the end of the day, we 100% don't know what is going on. Facts. There. We don't know the 100% reason why they've left. Yeah. And we're all kind of like, is this the reason why? But I think obviously the concrete thing that's kind of there is the Leicester factory situation and how much the media's pushed it. And, have they just kind of got to that point now where they've gone, we just don't want our name brought up with this and we're going to step away. I mean, obviously it's not great. It's not ideal that the auditor stepped away. We didn't want it to happen, but I'm sure they will find another auditor. I think there was the article at the time, I can't remember which one it was, that said 4 out of 5 auditors won't work with BOOHOO. which you could kind of understand because, you know, if you're not involved with them, why would you go? Because you're looking at the media right now and going, I'm not working with them. Our name's going to be sort of tied with them.
Yeah.
But at the same time, you know, I'm sure in the current climate and if you know, it was 4 out of 5. So clearly there is an auditor there that does want to work with Boohoo. So I do think that when you think about the current climate, the money that Boohoo probably be willing to pay and could pay probably more for because they have such a good balance sheet as well. I think it's something that they will sort out, but I think it's just a situation that's just come up with because of the media and how much they've just got it in for Boohoo. I mean, I've never seen an action.
Why do you think they've got it in for? Because I mean, ASOS, they had their issues a few years back, but they're not getting slaughtered as much as Boohoo are. You know what I'm saying? Back in ASOS's time.
Mm-hmm.
So why are they constantly on Boohoo then? Why do you think that is?
To be honest with you, I've been thinking about this a lot, and I still have no idea what it is. I mean, there was still kind of negative before the kind of you know, the whole Leicester City factory. And every time I say Leicester, I know I say Leicester City, Leicester factory situation. I think that obviously didn't help, and I mean, I generally don't know what it is. I don't know if it's because it's more online and it's, you know, something to do with the younger generation and Boohoo in when you know,
Hello? Hello?
when they talk about Boohoo.
Hello?
You got me? Hello?
Yeah.
Hello?
Sorry. Yep. Sorry.
Yeah,
You lagged a bit. Yep. Go on.
No problem. Let me know if it cuts out again. I'll go off my I'll go on my 4G rather than my Wi-Fi.
Okay. Cool. No, you're good. You're good.
Yeah. But what's saying about that? But yeah, I don't know if it's just because Boohoo, you know, a bit more the younger generation online.
Yeah.
And that I don't know if that kind of brings viewers into their article, and they found that talking about Boohoo brings success in, so they'll carry on doing that. I don't know if there's any kind of, you know, short interest with the media. You know, you don't know that. You know, they don't disclose anything like that. So, I mean, it's hard to put a lot of things on. I just think maybe it's a combination of that the media gets good views from it. And I don't know if there's any personal gain there. I mean, I don't know about that situation either, but that could potentially be there, that someone, you know, in the company or, you know, has a short position there. But I mean, that's never going to come out, I don't think. But I've tried to put an actual like
reason.
Why is you know, reason why this is happening. I still can't do it, but maybe it's just a combination of all them things, really, with what's happening.
But it's multiple outlets. Like let's say it was just one, you know, media outlet that's constantly hitting, then you can probably say they've obviously got a short position or whatever. But you're talking the Guardian, talking the Daily Mail, BBC, everyone's attacking Boohoo. And for an investor, of course, you buy when there's blood in the streets. Do you get what I'm saying? And you buy when a company's in turmoil and whatnot.
Yeah.
But this made and when the auditor left, made me incredibly nervous, because I'm thinking the auditor could have left when this thing first broke out. The auditor could have left when the second largest shareholder for Boohoo left. The auditor had so many opportunities to leave, and I just felt like when it came time for them to do the financials for Boohoo, I just found it extremely odd that was the time that they chose to back out. So you don't think?
Yeah, I agree. I think
timing is suspicious.
I said on the channel when I did the video about Boohoo and the big massive drop, I thought the timing was so weird from them. But I mean, like I say, I mean, we don't exactly know what's going on inside the company, but
facts.
I know you kind of had your you know, your financial side of it, but I was looking at Boohoo's situation and I was like, why would they need to lie? Like the growth is so good. You know, why would they want to add another 5-10% onto it? So I was like, they haven't got that much to gain really, because the numbers are already really fantastic, and we know that it's previously done that. And I thought that maybe if it was something like a financial, you know, something dodgy going on with the financial side of it, I thought that they probably would have come out and reported that straight away. And I'm sure that would, with what goes on with Boohoo, I'm sure the media would have been straight on it. Like, is there something dodgy with financial going on here? And I think that with how the media reacts, that would have been straight out there. The Guardian would have been like 10 minutes later with an article talking about Boohoo. So I think that if it was something a bit more serious, I think something would have started leaking out a little bit right now. So yeah, I mean, like I say, I agree with you. The timing is really, really strange, because you would have think it would have been really early on, or after, before, the Levitt report or anything like that. I mean, maybe it was the Levitt report, and maybe they just kind of looked and went, it's a bit worse than what we thought. We're going to step away now. Maybe that was what was happening with them. Maybe that was it. But I mean, like I say, you'd think they would have done it before the report came out, and then at least with the report, they kind of know, they are going to try and move in the right direction now. Which, your reputation's been damaged so much. We've kind of been tied to Boohoo.
Associated,
You might as well stick it through the other side now.
Exactly.
But yeah, I agree with you. The timing was weird, but yeah, I don't know how serious. I don't think it would be too serious, because, like I say, I think if it was, I think it would have come out straight away now.
I mean, I hope for your sakes, and also for you, other Boohoo investors' sakes, that it's nothing serious, like you said, and the company will continue to grow, and you guys will enjoy your profits. Obviously, I don't wish bad for any company. It's just, maybe I'm just a bit too much of a skeptic. And again, at the end of the day, the only way we'll find out is with time. Time will tell. We don't know.
Yeah.
If something dodgy is there, it will eventually come out. And if nothing comes out, and the company continues, the share price continues to do well, and the company does well, then it's a win for all of these investors. So yeah, I mean, hats off to you guys. Hats off to all you shareholders. But me, I need to sleep at night. Do you get what I'm saying? I want to sleep at night. So especially over weekends. It tends to all leak during the weekends. So I like my weekends. Do you get what I'm saying?
Yeah, exactly. I know what you mean. But it's one of those, isn't it? But yeah.
Like balls of steel, as they say.
Yeah, I've got to say, it's one of the stocks that I've only ever been in, and I've looked at the management team and I've gone, come on now, can we sort this out a little bit? It's one after another. I think it is probably one of the most questionable management teams that I have invested into, to be fair, because of, like you say, the consistency and, but yeah, I'm still sleeping at night, so I'm still all right.
You know what that means? That means you haven't got that much money involved. I'm sure. No. But on that topic, Jacob, I was going to ask, like, what is your most speculative stock right now? Then, what would you say is your high spec?
Workhorse. I'd have to go with Workhorse, because I'm literally relying on someone else to say, yeah, we want you to do our bands. So it's kind of like even out of Workhorse's control that they're relying on such a big contract.
Yeah.
So yeah, I mean, that's probably why it's my smallest position, even though I do think they will get the contract.
Yeah.
Otherwise, I wouldn't have invested into it. I do think, looking at Workhorse, I'm like, we're just relying on someone else to give a big contract here. And with how long that contract's been delayed year after year, I think like the original contract was supposed to be 2017 or something.
Yeah.
Something like that.
Yeah.
So I think that being in a company where your future rests in someone else's hands to give you a contract is probably maybe that one. I mean, what do you think on that?
Yeah, I mean, they had their earnings on Monday. That came out, and in the earnings call, the CEO, he did say that, because they were meant to try and deliver, was it 300 vehicles by the end of the year? And they're not going to be able to hit that. And I felt like they did pull out the C19, the Rona card as an excuse, which I thought, I don't really buy it. Do you know what I mean? So it is really, I look at that company now and I feel like it's just a fad. Do you know what I mean? Like, where I've literally invested in this company on the hype of it winning a contract. And if anything, I almost regret investing in that company just for that basis, because if you look at their income their financials is trash. Like, the straight up.
Yeah.
It's trash, and I look at that stock and I'm almost disappointed in myself for investing, because it's just a fad, and the thing is as well, I think in terms of buy the rumor, sell the news, Like I feel like once they win the contract, then everyone will be like, okay, well, this is it. Everyone's gonna sell, right? So
Yeah.
I think people are expecting people to buy when they win the contract. But for me, I'm thinking I want to buy the rumor, like the hype of it, and then sell before maybe news is announced. I don't know. What's your thoughts? Do you think it will shoot up if they win the contract, or will people be like, okay, well, it's here now, I'm selling because that's why you bought it in the first place?
Yeah, I mean, it's tricky because it depends what sort of price it's at. I think if we were back at that range, where it was like $27 at one point,
Yeah.
and then I think
Yeah.
if they got the contract, then it
Yeah.
probably would have dipped. I think here at $18, I think it is right now. I think there's still probably room that it would shoot up from here. But something like where it was a bit higher, I would say it probably would have dropped if we got it. I think, to be honest with you, the biggest spike might come from if they go, oh, we're going to announce the contract on Friday. And then I think we'll probably see more and more people getting in beforehand. And then when it's announced, then it might drop. I think that's probably what I would expect to see.
Yes.
If I was betting on it.
So what's your strategy then with Workhorse? Like, when are you planning to sell, or are you going to hold for the long term? Is it a long-term position for you?
I kind of went from the point of view that if it shot up crazy in the short term, I would sell out of it. Which it kind of did, and I think it got to like 27 or whatever it was, really high. And I was like,
it hit $30.
Yeah, 30, yeah. And then I was like, maybe I should sell. But as soon as it hit 30, I mean, it went back down again after that. I think, was it Roth Capital had a little bit to play in that as well, I think.
Also, the fuzzy panda.
yeah, fuzzy panda time. That was so good.
We got a shout out though. We got plugged in the report.
yeah. Name and shamed.
That's it. I know. Terrible Crimea River. But they're laughing now though, to be fair.
Yeah.
They are laughing now because great short from them, I guess.
Yeah. If they shot it at them highs, they've done really well, haven't they, to be fair?
Yeah.
But yeah, I mean, to be fair, if they get the contract, I don't mind holding long term, because then the company's going to be able to do like quite a lot of millions or even in billions in revenue every year, and that's a pretty decent sized company for the current valuation. So I don't mind holding long term with that kind of view, but I think short term, if it was to go up so quick because of the excitement with the contract, I think I would sell out. And a bit like you here, I kind of actually regret not selling at 30.
Yeah.
Because I was kind of, when it was at that point, I was like having to think about it, and then it started dropping down. I was like, oh, maybe I'll see tomorrow if it does go back up, and then I might sell. But then it just sunk from there. So I'm a bit like you, and kind of like regretting that I probably should have sold there.
Yeah.
But at the same time, if it gets the contract, I don't mind holding it, because this company could be a pretty big deal, because it's going to have a good amount of revenue coming in with that contract. So yeah.
Fair enough. So Jacob, thank you so much, mate, for coming on to the channel. But I do one last question I do want to ask you is, what advice would you give to new investors jumping? Maybe they've seen your video and they're like, you know what, they've seen your Pinterest gains. They've seen portfolio gains. Like, I want some of that. Do you know what I mean? Like, what kind of advice would you give to them?
I would say that definitely your first year in investing is a big, massive learning curve, and just try and get as much knowledge as you can. And there's great information out there. I think, like, you look at the likes of Warren Buffett, for example, and Peter Lynch, for example. And I think in the YouTube scene, there's some really good YouTubers out there that will definitely teach you a lot for free as well. Which is great. So I'd say that you never go in with big expectations on your first year. Treat it as a learning curve. You'll learn so much, and then I'd say that you probably build on from there. And I'd definitely say that one of the big things that I've learned is, like Warren Buffett says, be greedy when others are fearful. Right. And on green days are not your friend.
No,
your red days are your friend.
Nice.
So yeah, I'd say those are probably the key points. I would say, yeah.
And you know what? Before, on that note, there was someone who sent me a picture. Like, they started investing in April, right? So they bought NEO.
Perfect time.
They bought NEO. I think it was like $4 or something like that, right?
Yeah.
And it is what it is. So she sent me her a screenshot of her gains right now. She's up over thousands of %. So she's thinking, yo, I'm the bee's knees. Do you know what I'm saying? So someone like that has never really experienced like, red portfolios because the portfolio has just been crazy. She bought Neo and got into a few other tech stocks that's just gone crazy.
Yeah.
So she's only known stocks to go up.
Yeah.
It's like,
yeah. Wait for your big first red drop, and then you'll be like, oh my God.
No, but Neo's been on a tear though. Neo's going crazy right now. Man.
It's been such a good run, hasn't it?
Yeah.
Such a good run. I mean, if you were able to buy in that like $1 range, like you're up so much right now. I'm a fan of Neo, to be fair. I think it's a pretty good company.
Yeah.
I think it still needs to develop a little bit more from where I would personally buy.
Yeah. So you're not in Neo?
Not in Neo, no. I like the company. I think it's a little bit far off profitability for me because it's still burning through like quite a few billion rather than million.
Yeah.
And I think the balance sheet's a little bit ugly. And I want to see how far they get with this expansion plan into Europe. But it's definitely on my watch list. I think in a few months' time, if the price is right and it's developed enough, I can see myself buying it, to be fair. But have you got shares in Neo?
I did buy it's literally less than 1% of my portfolio. I bought in at $26 a share. And I'm looking at it, I'm like, man, I should have just, I should have loaded the boat. But I'm looking at it, I'm just like, man, with the way there's so much hype around this, in the next couple of months, this could potentially be $100 stock.
Yeah, exactly. When it's in that sort of like straight line up, you just don't know where it's going to stop.
You don't know.
You don't know where it's going. You never know where it's going in the short term, but you've still got pretty decent gains on that, to be fair.
Yeah, I'm thinking of exiting, soon. Especially if it drops below $40. I would definitely take some profit. I'll pretty much take all my profits and then look for more opportunities because I just think right now the valuation is absolutely insane. Absolutely insane. It doesn't even make sense. But again, this year has been like the year of the EV bubbles. It's been the year of the SPACs as well. But regardless of that, you absolutely smashed it this year. Congratulations on your gains.
Cheers.
Amazing portfolio, and I look forward to watching more of your videos. And as you grow on the YouTube space, your channel, your portfolio, man, I'm rooting for you. I'm rooting for you.
Cheers, man. I'm also checking your content out as well. You put some fantastic content out there, so we'll be checking yours as well.
Appreciate it, brother. So thank you so much, Jacob, for joining our third episode of Stock Talk Sundays. You killed it, brother. You killed it.
Cheers. It's been a pleasure to be here. It's been a good laugh.
Yeah. All right. So I will catch up. I hope you don't mind if we do like a part 2 at some point.
Yeah. Sounds good. We'll have to
we should do like a review, like a final end of year review, and probably put portfolios next to each other.
Yeah. Let's have this competition in. Let's go.
Let's go.
Yeah, it sounds good, man. Sounds good.
Yeah. Cheers, Jacob. You're a legend, bro. Thank you.